Hey, it's Joseph Gonzales, your real estate agent for the Austin area and the suburbs surrounding the greater Austin area. And today we have a special video for you. I know one of the hardest things for home buyers to do right now is consider buying a home at high interest rates. What we're going to be doing is I have one of my partner lenders, Michael Nasfar from Movement Mortgage, who's going to explain exactly how you can get a 5.25% buying a new construction versus a resale property and how much money you can save. I can tell you it's going to be a lot more than you probably think. Just by lowering your interest rate, you're going to be able to lower that monthly mortgage. With that being said, enjoy this video. Make sure you like and subscribe or drop any comments down below for Michael and I so we can explain anything that we may have missed in this video.
Hi, this is Michael with Movement Mortgage, and I wanted to show you the difference when purchasing a new construction home with doing a permanent rate buy down versus a temporary buy down. So this illustration I have first is going to show you the benefits of doing a permanent rate buy down, the costs that go into it, and the difference in doing a resale home where you would receive a standard market rate. So let's just jump into it. We're looking at a home in Arcadia Ridge with Empire Communities in San Antonio. The sales price on this home is $364,990, and we're looking at FHA financing with a minimum down payment of 3.5%. Now, our rate that we've bought down using the $20,000 incentive is 5.25%. The standard market rates are more like 7.125, 7.25. So with that $20,000 incentive, we're able to buy the rate down very aggressively and much lower, almost 2% lower than the market rates. That's done with doing a discount point, 5.5 points, and we're using the $20,000 incentive that the builder's providing for using their preferred lender and title company. The basics of this, after you add in all the closing costs, appraisal fees, survey, title company fees, and an escrow account, which we'll go into in another video on what the components are of an estimate, the total with the down payment and all the closing costs come out to $41,669.70. Then from there, we'll start to deduct the credits and the incentives, which would be $1,000 for your earnest money. That's money given when you get on contract. Then we subtract out the $20,000 incentive. Your cash to close is the remaining closing cost plus your down payment, since you used all the incentives to buy the interest rate down. Now, when we get into the payment, it'll consist of your principal and interest, homeowner's insurance, property taxes, FHA mortgage insurance, and for illustration purposes, I've added the HOA to the monthly payment, even though you'll pay that outside of your mortgage. So you'll see for a $364,000 home on FHA financing with a permanent rate buy down at 5.25%, you'd have a monthly payment of $2,707.55. If we looked at a resale home, you'd be looking at a payment of $3,143. That's using a standard market rate without the $20,000 incentive that you'd see with Empire Communities. That payment is going to be at least $480 to $490 higher, not only in the difference in the interest rate, but also resale homes have a higher insurance premium than a new construction home, as insurance companies afford lower payments, lower premiums on a new home since there's less claims made, less problems, since you have a 1-year homeowner's warranty that the builder provides in case there's any defects. So this is the illustration on if we're doing a permanent rate buy down.
So what do you think? Did the explanation make sense to you on how you can actually get the rate buy down, actually not using your own money necessarily to buy the rate down, but using the builder's incentives? I think Michael did a great job explaining it, but again, we want to make sure that if you're looking to buy a home that's priced at this point, that we can be a resource for you, help you get these incentives, and also give you other incentives that we may be able to offer as your real estate agents that you may not be able to see as the general public. Again, with that being said, make sure you like, subscribe, and if you have any questions about anything that Michael explained, make sure you drop them in the comments. And if you enjoyed this video and want to see other videos like this where we break down pricing and how you can buy a home with a lower interest rate, make sure you check out this video here.